This week, the government took decisive and forceful actions to stabilize and strengthen public confidence in our financial system.
Goldman Sachs raised the chances of a recession in the United States to 35%, up 10 percentage points from its previous prediction in the aftermath of Silicon Valley Bank's collapse and a dip in stock futures for large U.S. banks. This information comes as Treasury Secretary Janet Yellen testifies before the Senate Finance Committee on the status of the U.S. banking system.
I can reassure the members of the committee that our banking system is sound and that Americans can feel confident that their deposits will be there when they need them.
Yellen noted that the Treasury Department is working with the Federal Reserve and the Federal Deposit Insurance Corporation to protect all depositors after the collapse of Silicon Valley Bank and Signature Bank's failure days later.
On Monday morning, customers were able to access all of the money in their deposit accounts so they could make payroll and pay the bills.
SVB is the 16th largest bank in the U.S. It collapsed last week after a run on the bank, leading to clients withdrawing $42 billion in a single day. Near the end of the week, the bank had a $958 million negative cash balance, and its stock price had fallen about 60%. Fears about the strength of financial institutions stemming from the bank collapses led to a dip in stocks and shares in both the U.S. and in Europe. The financial crisis has caused shares to drop in 4 of the U.S.'s largest banks: J.P. Morgan Chase, Bank of America, Wells Fargo, and Citigroup.